So here's the big question for today. What is hotter right now? The dollar's decline or the fact that Oracle is among the firms to enable TikTok to continue US operations? Traders, before you place your next trade, watch this. Hi there, I'm Francois, your market analyst here at ATFX Africa, and welcome back to your daily market brief, where we break down the fundamentals, map out the charts, and keep it sharp and simple. Let's kick things off today with the yen, which is flexing its muscles around 147 per dollar, riding a 2-day winning streak. Why? Well, markets are almost fully pricing in a Fed rate cut this week. 25 basis points is the consensus. That dovish tone is dragging the dollar down, while the Bank of Japan is expected to hold steady at 0.5%. But here's the kicker. Even though the yen is gaining, political uncertainty in Japan could throw a curveball, adding in positive global risk tone. And while the yen bulls might not get a completely free run. Let's head over quickly and look at the charts. If we have a look here, USD JPY slipped to around that 147 mark. And price action looks heavy at this specific point. Repair at that 200-day average suggests the downside bias remains. So if sellers break 146.2, the next stop is 145.2. On the flip side, a push higher faces resistance at 148, then 149. The bulls is needing to break above this key level to flip the script. So with that being said, right now the yen is acting like it has the upper hand. But traders are clearly waiting on the Fed as well as the Bank of Japan's 1-2 punch later this week.
Zero commission on stocks? Yeah, nothing. What if you could get this value today? Turns out you can. Join ATFX now and let's get you started.
Let's move over to oil, which has been on a 3-day rally, now sitting at 60 cents a barrel. The big driver here, well, supply fears. Ukraine strikes that knocked out a key Russian refinery unit, and the EU is mulling sanctions on companies helping Russia's oil trade. Add in fresh geopolitical tension in the Middle East, and suddenly oil's wearing a risk premium badge once again. At the same time, a weaker dollar is making crude more attractive, especially for buyers. And let's not forget, the Fed's rate cut could stimulate fuel demand. So let's look at the charts real quick. If we have a look here, WTI has climbed to $63.40 during yesterday's trade. Over the past month, oil is up about 1.3%, but still down more than 9% year on year. Key resistance is shaping up around that $63.80 a barrel and then at $65.50. While support is sitting at $62.60 and then $61.20. If sanctions bite harder, that ceiling could crack. But if the demand outlook weakens again, those supports will, well, maybe be tested really fast. So for now, oil is like a tightrope walker, balancing geopolitical risk on the one side and supply demand realities on the other. Let's finish things off for today with some tech talk. Oracle stock is currently on fire, closing yesterday's trading session at $302.14, up 3.41% in a single session, with a jaw-dropping 77% gain over the past year. What's fueling this surge? Well, 2 words: cloud and AI. Jefferies reaffirmed their buy rating with a $360 price target, and BNP Paribas even raised their call to $377. The real kicker, Oracle just secured a $300 billion cloud contract with OpenAI, one of the largest in history. Having a look at the charts here, after a 15% pullback, from its post-earning highs, Oracle has bounced back sharply. Short-term momentum looks strong within this specific stock, with support sitting near $260. Resistance, well, that is sitting at that record high around $345, with projected potential upside far beyond that. And don't forget the wild card here. Oracle is reportedly in the mix with the TikTok US deal. If that goes through, expect even more market buzz. With that being said, tomorrow the spotlight shifts squarely onto the Federal Reserve. With the rate decision just hours away, expect volatility to ramp up across currencies, commodities, equities, indices, you name it. So the question here is, will Powell and Co. deliver just a 25 basis point cut or hit a deeper cutting cycle? Well, that's the million-dollar question here, and we'll tackle that in our next brief. With that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa by clicking the link in the description below and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.